Thank you for watching the SMB Forex Beginner Guide series. My name is Mark Principato. The goal of these reviews is to highlight techniques and other relevant information that may help traders gain a stronger understanding of how to operate as a short-term trader within the foreign exchange market. If you would like to know more about how SMB Forex can help you improve your trading, please contact me at mprincipato@smbcap.com. In today's lesson, I'm going to cover an aspect of candlestick analysis that focuses on the wicks, or long tails, of a price candle. Candlestick analysis has been used in market speculation for hundreds of years, dating back to the Japanese rice traders. They are heavily in use today, and for good reason. They do provide very important information if you know how to read them properly. Candlestick analysis is not learned overnight or by reading a book. It takes time to understand the subtle messages they imply about present market conditions. So in this lesson, I'm going to focus on specific observations that I utilize in my own candlestick analysis. This is what I refer to as the long tails. They're also known as candle wicks. Long tails on a candle can appear on the top or bottom. The time frame of the candle and the length of the long tail are very important pieces of information, and they can be part of an official candlestick pattern or they can be observed alone. Either way, they offer the same information. Why are they so important? Long tails imply a reversal in price momentum. Let's look at an example. After the candle opens, it makes a weak attempt at pushing higher. Then sellers enter. When selling pressure peaks, the candle was full at the time. No signs of buying yet. No long tail. Then suddenly, price stops. Then it starts back up, leaving a tail. And then the period closes. In this example, the period began with selling pressure dominating the price action. As the period came to a close, buying pressure came in, creating the long tail. To me, this highlights weakness or overall lack of selling. A truly weak condition means the period should close on its lows, not off its lows. We can also interpret this as a sign of buying. In candlestick analysis terms, this particular candle can almost be considered a hammer, which is a common reversal pattern. The only difference is a hammer has no tail on top. In my own analysis, I will consider this type of candle a hammer because for me, the long tail is the relevant piece of information here. Same goes for a bullish candle that meets resistance and sells off to close with a long tail on top, a clear sign of selling. These signs are very helpful because they contribute to my analysis of the price action at the moment. This also allows me to find price action confirmation, adds confidence to a position, or helps me exit a losing trade earlier. Let's take a look at some examples in today's chart of the euro-dollar pair. Notice what happened to the price after this 15-minute candle closed. The long tail signified support and the lack of selling pressure. It also formed a smaller time frame double bottom, another bullish argument. This may not be enough information to open a long position, but it is enough to choose to avoid further shorts before the squeeze. On the bear side, notice the shooting star-like pattern off the 1.2350 level. Clearly a sign of selling once the candle closed. The result was a new intraday low. After a close like that, it should be apparent to avoid longs. By the way, what makes a long wick long? It is the size of the wick relative to the body of its candle. Keep in mind, a long tail appearing on the candle does not guarantee a reversal or follow-through. It is a helpful measure of the balance of buying or selling that is occurring at the moment. Also remember, candlesticks are very helpful, but alone they don't offer enough information to base trading decisions on. Candlestick patterns can appear randomly. One very important guideline to candlestick analysis is taking into consideration where in the trend the candlestick is appearing. The points to take away from this lesson are: long wicks on candlesticks offer valuable information by implying potential momentum reversal areas. The longer the tail and the larger the time frame, the more significant it is. Candlestick analysis is much more effective when used in conjunction with other forms of analysis. They are great to use as a confirmation tool. That's all for now. If you would like to learn more about how SMB Training can help you become a professional trader, please email me at mprincipato@smbcap.com. See you next time.